Good morning, this is Tim McGowan for the Finance News Network. US equities finished mixed in Thursday trading, with the S&P 500 shedding its morning strength. Investors received more good economic news when the July producer price index showed a surprise decline from June. PPI dropped 0.5% compared to an estimated 0.2% gain, according to the Dow Jones survey. The Wall Street Journal noted the Fed will want to see more evidence of cooling inflation before deciding on the magnitude of its September rate rise. Reuters reported Biden administration recalibrating thinking on whether to scrap some China tariffs or potentially impose new ones following a ramp-up in tensions surrounding Taiwan in the wake of Pelosi's visit. Overnight, both the S&P 500 and the Dow were flat, while the Nasdaq Composite slumped 0.5%. The three major averages opened the session higher, but lost steam as the day progressed. While investors are relieved that inflation is declining, it doesn't change the fact that the Fed Reserve will continue to be hiking rates. So while sentiment is improving, it's questionable as to whether this is just a bear market rally or something more substantial. Energy was the standout sector on crude's rally, posted a 2.6% gain in the oil price. Best performing industries included entertainment, banks, insurers and media were amongst the outperformers. In after-hours trading, alumina slumped nearly 23%, post-market after the company missed top and bottom line estimates in the most recent quarter and issued disappointing guidance for the full year as it faces troublesome macro environment. Rivian Automotive, the electric vehicle maker, rose 3% in after-hours trading after beating revenue estimates and posting a smaller than expected loss in the latest quarter. The company reaffirmed its delivery estimates for the year, but said it expects a larger loss than anticipated as it grapples with supply chain constraints. Across the market, car makers' battery plans are at risk as raw material prices soar. It appears there's a lot of investment in battery cell manufacturing in Europe and the US, but not sufficient enough in the raw materials. Right now, 85 to 90% of materials that go into batteries are coming from China. So a big disconnect is coming, particularly if you remember that car makers had difficulty in ensuring semiconductor supply from China due to COVID supply chain issues. More crucially, availability of minerals is a looming problem for latecomers. VW, Ford and GM, with the latter agreeing last week to prepay $200 million to lithium producer Livent for supplies. Looking ahead, there's an urgent emphasis to secure a supply chain away from China as the coronavirus pandemic and Russia's brutal assault on Ukraine have made it clear that a reliance on global supply chains in certain strategic areas is a big risk. This is the problem the EV industry is now looking to change with the support of Western governments. On the currency front, the US dollar index was flat, though still off 1.3% for the week. One Australian dollar has strengthened compared to the US dollar, buying 71.1 US cents. On the commodity front, iron ore futures are pointing to a 0.4% gain, gold lost 0.4%, silver was down almost 2%, copper was up 1.6%. The SPI futures today are pointing to a 0.3% fall. This is Tim McGowan for the Finance News Network. Have a great weekend.